Let's give you a sense of what's moving the markets. I'm now joined by Odwa Makwenju, who's portfolio manager at Momentum Securities. Odwa, very good afternoon to you. I hope you're well. I mean, the U.S. military campaign in the Middle East has now stretched for nearly 2 weeks, and oil prices have climbed sharply over the past week. As we assess how worse this could essentially get, what's the market's reaction to the actual supply disruptions?
And it does seem like it could get much worse. I mean, if you firstly look at what's happening with now targeted attacks at the Red Sea, we did see the oil price climb 14% this week alone after a previous rally of north of 10% last week. So in terms of oil prices, it does seem a bit concerning right now. And we've seen it go across there into currencies and also inflation numbers. Locally, we felt it quite aggressively with a 5% on our end.
Yes, absolutely. And South Africa, as we know, imports most of its fuel. If oil remains elevated for an extended period, how quickly will consumers now feel the impact through petrol prices, inflation, and even business costs?
That becomes the worrying number that we are looking for. We saw retail sales coming out also yesterday, which was quite positive. We did seem a bit resilient on that front. However, as I said, the inflation number coming out at 5% is showing that it is quite impactful. We did have a cut in the beginning of July. However, is now what's seen to come in August in terms of full costs. The unfortunate thing is that that's going to then cater to different sectors of the market. Services inflation came up slightly yesterday when the print came out, or the day before rather, which then could become worse for the consumer. However, luckily, we had our interest rate remain unchanged.
Yes, the South African Reserve Bank surprising the markets by keeping interest rates unchanged at 7%. This is despite rising inflation, higher oil prices, the escalating geopolitical tensions in the Middle East. The decision has reignited debate over whether or not the bank is taking a calculated pause or perhaps falling behind the inflation curve. What do you think ultimately tipped the balance in favor of leaving rates unchanged?
Now, the one positive, the biggest positive is with regards to the consumer. It then allows the consumer to breathe a bit more. And the South African economy does rely heavily on the consumer. However, in terms of looking internationally, we are not the only central bank to take a pause this time around. However, we were quite early as one of a few central banks who did increase interest rates previously in May. So it does help on that front. However, the currency was strong before yesterday's print. Right now showing a bit of weakness, and that's where we could see a bit of a cascading effect going forward. However, next week becomes a focal point with the US also announcing its interest rate decision, which then should give us a bit of more light in terms of what to expect.
Now, looking at company news, technology-driven companies Tesla and Alphabet both came under significant pressure after their earnings. Were investors disappointed by the actual financial results?
Financial results were quite beautiful if you look at the headline numbers. So your revenues, for example, if you look at Google's, they had, especially in the cloud business, going up 82% year on year. However, the biggest issue is around the capex spending. They are now expected to spend about 200 billion USD in terms of capex in AI, and the return is the worrying part. If you look at Tesla, on the other hand, they did have some strong revenues. However, the big issue is then with the next product line, which is Optimus, the humanoid robot. They still haven't gone into production. Robotaxi was also another main focus, and they still haven't. They're still waiting for regulatory green light on that front, and they're still taking a bit longer than anticipated. And that's where the two companies went into negative cash flow, which free cash flow rather that is, and that then hurts their business going forward. And that's why there was a sell-off.
And does it indicate that Wall Street is perhaps raising the bar too high, because these are companies that are still highly profitable?
That is correct. They are still quite profitable, but it's where is the profit going? Not going into it as much the shareholders anymore. No more dividends as high as historically. And I mean, companies such as Google, for example, this is their first ever negative free cash flow period. And the big issue right now for the past 2 weeks has been, what is the return on AI? Are we seeing it? Is it coming through? And that's the main question.